Hi, welcome to another episode of Strategic Insights, providing you with the latest update in the areas of business, technology, and management. I'm your host, Dr. Martin Lockstrom. Let's dive in. Today, we're diving deep into what the second Trump presidency will mean for the US and the rest of the world. Now, before we get started, I want to be crystal clear. This is a speculative analysis based on previous policies, statements, and potential indications. It's not a prediction, just an exploration of possible economic implications. First, let's start with the impact on the US economy. Let's set the stage by looking back at Trump's first term. His economic approach was characterized by significant tax cuts, aggressive deregulation, and an America First trade policy that reshaped economic relationships both domestically and internationally. If we consider a potential second term, we might see those strategies not just continued, but potentially amplified to an even greater degree. The cornerstone of Trump's economic philosophy has always been about protecting domestic industries and creating what he calls a winning economic environment for American businesses. This means we'd likely see a continuation and potentially an intensification of the economic strategies that defined his first term. Let's start with taxation, which is always a critical economic lever. During his first presidency, Trump implemented substantial corporate tax cuts, reducing the rate from 35% to 21%. A second term might see attempts to not just maintain these cuts, but potentially push them even lower. The argument from supporters will be that lower corporate taxes stimulate business investment, create jobs, and drive economic growth. Critics, however, will point to the potential impact on federal budget deficits and income inequality. The manufacturing sector could experience a significant transformation. Trump's commitment to bringing manufacturing jobs back to the United States will likely move from a campaign promise to an aggressive policy initiative. We might see an expansion of tariffs, more stringent trade policies, and potentially even more direct incentives for companies to relocate production to American soil. This could create a complex economic landscape, potentially generating domestic manufacturing jobs while simultaneously increasing production costs and consumer prices. Energy policy represents another arena of potential dramatic change. Trump has consistently been a strong supporter of traditional fossil fuel industries, viewing them as critical to American economic strength. A second term might see a complete rollback of environmental regulations, massive support for oil, coal, and natural gas production, and potentially reduced support for renewable energy initiatives. This could create short-term economic opportunities for traditional energy companies, but might position the United States at odds with global trends toward green energy transformation. The financial markets will likely experience significant volatility. Trump's economic approach is characterized by unpredictability, which can create both opportunities and challenges for investors. His approach to trade negotiations, international economic relationships, and domestic policy often creates uncertainty. This volatility could lead to interesting dynamics in stock markets, potentially creating short-term opportunities for aggressive investors while making more conservative investors nervous. Immigration policy intersects significantly with economic strategy. Stricter immigration policies could dramatically reshape labor markets, particularly in sectors like agriculture, construction, technology, and service industries that have historically relied on immigrant workers. This might lead to labor shortages in some areas, potentially driving up wages, but also creating challenges for businesses struggling to find workers. Some industries might accelerate automation efforts to compensate for reduced labor availability. Infrastructure spending could become a major economic stimulus strategy. Trump has long discussed massive infrastructure investments, and a second term might finally see comprehensive implementation. Large-scale public works projects could create jobs, stimulate economic growth, and potentially modernize critical national infrastructure. We might see significant investments in transportation, communication networks, and traditional infrastructure like roads and bridges. The healthcare and pharmaceutical sectors will likely face significant changes. Trump has been critical of the Affordable Care Act and has pushed for more market-driven healthcare solutions. A second term could see further attempts to reshape healthcare policy, potentially creating opportunities for private sector healthcare providers and pharmaceutical companies, while potentially reducing healthcare access for some populations. Technology represents another fascinating sector that will likely see substantial shifts. Trump's administration has been critical of major tech companies, particularly regarding market dominance and perceived political bias. We might see increased antitrust investigations, more aggressive regulatory approaches, and potential legislative efforts to reshape the technology industry's economic landscape. For individual Americans, the economic impact will be multifaceted. Potential tax cuts might provide short-term financial relief for some demographic groups. Job market dynamics could shift, with potential growth in manufacturing, traditional energy, and infrastructure-related sectors balanced against potential challenges in more globally integrated industries. Immigration policy will intersect significantly with economic considerations. Restrictive immigration approaches could impact labor markets, particularly in sectors like technology, agriculture, and service industries that rely heavily on international talent. The potential reduction in skilled and unskilled immigrant workforce could create labor shortages, increase wage pressures, and necessitate complex economic adaptations across multiple industries. Technological and intellectual property dynamics will undergo substantial recalibration. The previous administration's approach to technological competition, particularly regarding Chinese tech companies, suggested a willingness to use economic policy as a strategic tool. A renewed focus on technological sovereignty and restricted technology transfer could accelerate global trends toward technological fragmentation, with companies and countries developing more localized and potentially less interconnected technological ecosystems. Multinational corporations will face complex strategic challenges. The potential for rapidly changing regulatory environments, unpredictable trade policies, and geopolitical tensions will require sophisticated scenario planning. Companies will need to develop more flexible operational models, potentially diversifying their geographic footprints and developing more robust contingency strategies to navigate potential economic disruptions. Emerging markets will find themselves in particularly precarious positions. Countries that had developed economic strategies predicated on stable international relationships might need to rapidly recalibrate their approaches. The potential for sudden policy shifts, trade restrictions, or geopolitical realignments will introduce additional layers of economic uncertainty, potentially slowing foreign investment and creating more complex risk assessment environments. The global financial infrastructure will also experience significant stress. Existing multilateral economic institutions like the World Trade Organization, International Monetary Fund, and World Bank might face challenges to their established operational frameworks. The potential for reduced American commitment to these institutions could accelerate existing trends toward more regionalized economic cooperation models. Ultimately, a Trump re-election will not represent a simple return to previous economic configurations, but will operate within a dramatically transformed global context. The economic landscape has fundamentally shifted since his previous term, with pandemic-induced restructurings, accelerating technological changes, and increasingly complex geopolitical dynamics, creating a more intricate environment for economic policy implementation. The most successful global economic actors will be those capable of rapid adaptation, sophisticated scenario planning, and nuanced understanding of potential policy trajectories. Flexibility, strategic foresight, and the ability to rapidly reconfigure economic strategies will become paramount in navigating the potential complexities of such a political reemergence. As the world watches and waits, the potential economic implications of a Trump re-election represent not just a national political event, but a potentially transformative moment in global economic history, a moment where established paradigms could be dramatically reshaped, creating both significant challenges and unexpected opportunities across international economic landscapes. Finally, let's examine the implications for global supply chains. In the rapidly evolving landscape of global economics and geopolitical strategy, the potential re-election of Donald Trump represents a seismic shift with profound implications for international supply chains. The intricate web of global trade dynamics stands on the precipice of significant transformation, driven by policy approaches that fundamentally challenge the established multilateral trading frameworks developed over decades of diplomatic negotiation. During Trump's previous presidential term, supply chain managers and corporate strategists witnessed an unprecedented era of trade volatility characterized by aggressive tariff implementations, bilateral trade negotiations, and a marked departure from traditional multinational cooperation. A potential second Trump administration will likely amplify these disruptive tendencies, compelling corporations to recalibrate their global sourcing and manufacturing strategies with unprecedented urgency. The most immediate and tangible impact will likely manifest in the relationship with China, the world's primary manufacturing hub. Trump's previous administration demonstrated an uncompromising stance toward Chinese economic engagement, implementing extensive tariffs and export controls that substantially increased operational costs for multinational corporations. A renewed presidential term will potentially escalate these economic tensions, forcing companies to undertake comprehensive re-evaluation of their supply chain architectures. International economic relationships will undoubtedly be reshaped. The America First approach will likely continue, potentially leading to more protectionist policies that could significantly affect global trade dynamics. Relationships with key economic partners might be redefined, with trade negotiations potentially becoming more confrontational and transactional. The agricultural sector will also experience significant changes. Previous trade tensions with countries like China had substantial impacts on American farmers. A second term might continue or intensify these approaches, potentially forcing agricultural producers to find new markets and adapt to changing global trade dynamics. It's crucial to understand that these are speculative scenarios based on past policies and statements. The actual economic impact will depend on numerous factors, including global economic conditions, congressional dynamics, unexpected global events, and specific policy implementations. The economic landscape we're exploring is one of potential dramatic transformation. It's a world of economic possibilities where traditional approaches are challenged and new strategies are pursued with aggressive determination. Some sectors might see remarkable growth while others might face significant disruption. This isn't about predicting the future, but understanding potential economic scenarios. Economic policy is complex, influenced by countless variables, and no single analysis can capture the full complexity of potential outcomes. What are your thoughts on these potential economic scenarios? Do you see opportunities or challenges in this hypothetical economic landscape? Drop your comments below and let's have a thoughtful discussion about economic possibilities. Now let's move on to the potential impact on the global economy. In an era of unprecedented global economic uncertainty, the potential re-election of Donald Trump represents a seismic shift with far-reaching consequences that extend well beyond the borders of the United States. As geopolitical and economic landscapes continually transform, the return of a polarizing political figure to the world's most powerful office could trigger a cascade of complex and interconnected economic repercussions that will reshape international trade, investment strategies, and global economic relationships. The economic implications will first manifest in the realm of international trade policy. Trump's previous administration was characterized by an aggressive protectionist stance, implementing substantial tariffs on Chinese goods and challenging long-established multinational trade agreements. A second Trump presidency will likely resurrect and potentially intensify these confrontational trade strategies, creating significant volatility in global markets. Countries that experienced economic friction during his first term, particularly China, will prepare for renewed economic confrontation, potentially accelerating their efforts to develop alternative economic networks and reduce dependence on American trade infrastructure. Financial markets will likely experience immediate and pronounced reactions to such a political development. Investors and institutional traders may recalibrate their portfolios, anticipating potential policy shifts in sectors like renewable energy, manufacturing, and international technology transfer. The uncertainty surrounding potential trade restrictions, tax policy changes, and geopolitical tensions will introduce additional risk premiums into investment calculations, potentially slowing foreign direct investment into the United States while simultaneously creating opportunities for strategic repositioning by international economic actors. The energy sector will face particularly dramatic potential transformations. Trump's previous commitment to fossil fuel industries and skepticism toward climate change mitigation efforts will likely translate into policy frameworks that prioritize traditional energy production. This approach will create significant tension with global efforts to transition towards sustainable energy models, potentially slowing international momentum on carbon reduction and renewable energy development. Countries and corporations with substantial investments in green technology might need to reassess their strategic planning, anticipating a potentially less supportive regulatory environment in the world's largest economy. Currency markets can also experience substantial volatility. The potential for more isolationist economic policies could impact the US dollar's global standing, potentially accelerating existing trends toward de-dollarization in international trade. Countries like China and Russia, which have been gradually developing alternative financial transaction mechanisms, might interpret the Trump re-election as an opportunity to further challenge the dollar's hegemony, investing more aggressively in creating parallel financial infrastructures that reduce American economic influence. Manufacturers across multiple sectors will confront significant strategic challenges. Technology companies relying on complex global semiconductor supply chains will need to develop more resilient and geographically diversified procurement strategies. Automotive manufacturers, depending on intricate international component networks, will be compelled to accelerate nearshoring and reshoring initiatives, potentially reconstructing entire production ecosystems to mitigate geopolitical risks. The manufacturing sectors in Mexico and Southeast Asian countries like Vietnam, Thailand, and Malaysia will likely experience substantial transformation. These regions have historically benefited from companies seeking alternatives to Chinese production environments, and a Trump re-election could accelerate this trend. Corporations will potentially accelerate investments in these emerging manufacturing destinations, viewing geographical diversification as a critical risk mitigation strategy. Agricultural supply chains will encounter particularly complex dynamics. Trump's previous approach to international trade agreements, characterized by bilateral negotiations and protectionist policies, created significant volatility in global agricultural commodity markets. Farmers and agricultural exporters worldwide will face potentially unpredictable trade environments, necessitating sophisticated risk management approaches and flexible international marketing strategies. Energy supply chains represent another critical domain of potential transformation. Trump's historical emphasis on domestic fossil fuel production and skepticism toward renewable energy frameworks could reshape global energy procurement strategies. Oil-producing nations and renewable energy developers will need to anticipate potential policy shifts that could dramatically alter international energy trade dynamics. The technological sector will experience particularly nuanced challenges. Semiconductor supply chains, already complex and geopolitically sensitive, will likely undergo substantial reconfiguration. Restrictions on technology transfers, enhanced export controls, and potentially more aggressive national security-driven interventions could fundamentally reshape how global technology companies structure their international operations. Pharmaceutical and medical equipment supply chains will also confront significant strategic considerations. The COVID-19 pandemic exposed vulnerabilities in global medical supply networks, and a Trump administration will likely emphasize domestic production capabilities and reduce dependence on international manufacturers. This could trigger substantial investments in domestic manufacturing infrastructure and potentially disrupt established international pharmaceutical supply relationships. Financial services and investment firms will need to develop sophisticated predictive models, accounting for potential trade policy volatility. The uncertain geopolitical landscape will demand more agile investment strategies, with increased emphasis on scenario planning and risk mitigation. Corporations will be compelled to develop more complex economic forecasting methodologies capable of anticipating rapid policy transformations. The automotive industry stands at a particularly critical juncture. Complex global supply chains involving components manufactured across multiple continents will require fundamental restructuring. Increased tariff risks, potential trade barriers, and geopolitical uncertainties will necessitate more localized production strategies, potentially accelerating investments in North American manufacturing capabilities. Technological innovation and artificial intelligence will play increasingly crucial roles in supply chain resilience. Companies will invest heavily in predictive analytics, machine learning algorithms, and advanced risk assessment technologies designed to provide real-time insights into potential geopolitical disruptions. The ability to rapidly adapt and reconfigure supply chain architectures will become a critical competitive advantage. Emerging markets will need to develop more sophisticated economic diplomacy strategies. Countries traditionally positioned as critical manufacturing or sourcing destinations will be compelled to diversify their international economic engagements, reducing vulnerability to potential unilateral trade policy shifts. This will likely accelerate trends toward multilateral economic cooperation and alternative trading frameworks. Labor markets will experience significant transformations as companies recalibrate their global operational strategies. Workforce development programs will need to emphasize adaptability, technological proficiency, and cross-cultural communication skills. The traditional paradigms of international labor allocation will undergo fundamental reevaluation, with increased emphasis on flexibility and technological integration. Sustainability considerations will intersect with these complex supply chain dynamics in increasingly nuanced ways. Companies will be compelled to develop more holistic approaches that balance economic efficiency with environmental responsibility, geopolitical risk mitigation, and technological innovation. The traditional boundaries between economic strategy, technological development, and environmental considerations will become increasingly blurred. In conclusion, a potential Trump re-election will represent far more than a simple political transition. It will signal a profound recalibration of global economic interactions, compelling corporations, governments, and economic actors to develop more sophisticated, adaptive, and resilient strategic frameworks. The future of global supply chains will be characterized not by stable, predictable trajectories, but by dynamic, complex, and continuously evolving landscapes of opportunity and challenge. One thing is for sure, it won't be boring. That's all for this episode. If you like it, please subscribe to the channel and hit the like button in order to stay up to date with more awesome contents ahead. Until next time, take care. Bye-bye.